This, of course, is a company very much linked with the way oil prices fluctuate. In fact, just to bring you up to speed with the overnight development, if you didn't track it so far, crude oil prices were down about 3% overnight, as US President Trump has called on OPEC to ease its efforts to boost crude prices. Additionally, US sanctions on exports from Iran and Venezuela add to supply uncertainty. So what is the road ahead? MK Surana, CMD of HPCL, is joining us to talk about some of these issues. So thanks for joining in. 24 hours is a very long time in the market's life. So, till yesterday, we would have asked you about life at $68 a barrel, and now it's 65. But in any case, I mean, the rebound has been quite swift. How has that worked for you in the numbers in the fourth quarter in terms of the inventory gains that you will definitely look at, but also the pump prices?
So good morning to you. If you see the quarter four, I think quarter three ended with an average of around $57. And we are looking right now at somewhere in the range of 65 to 68. So definitely there is a gain of around $7–8, which will help us in our GRMs as well as the overall bottom lines. Crude price, as you said, that 24 hours is a long time, and it has been fluctuating a lot. But I did say earlier that the crude prices, while there was increasing, there was a rebound possible. I still expect that it should be in the range of 63 to 68. It can have the momentary or the day-wise spikes occasionally. But the overall crude prices are getting guided by many factors right now. And there is more demand concerns than the supply concerns. That is what is factoring in. On the supply side, of course, the Iran, the Venezuela, the US additional which they can put, and the cuts additional to what is agreed from Saudi Arabia. Those were the concerns which can come. Of course, there were some temporary issues also, like there was one of the oil fields in Saudi Arabia which was out temporarily. There are some concerns in Nigeria when the elections are going on. There were some concerns in Libya. But on the demand side, the US-China discussions, how it proceeds. But overall, there is a degrowth worldwide as far as Europe is concerned, as far as China is concerned. And to that extent, I expect prices of oil to be in the range of, let's say, below 70. Maybe momentary spikes may be there.
Okay. Good morning, Mr. Surana. Pleasure having you with us. I want to refer to a CLSA report, which you, I'm sure, would have read, which said that Asian gross refining margins are at 10-year lows, and that's the worry for the fourth quarter. Should your investors take that on board, that fourth quarter will be impacted by this, big low in Asian refining margins, or will that be ameliorated by some inventory gains?
If you see traditionally or historically, the Indian refineries tend to do better than the Singapore margins when the crude prices are going up, because of the simple reason that the Singapore margins are calculated on day-to-day basis, while we calculate on the actual crude purchase and actual product dispatches. And there is a time lag between the two. Now, the quarter four you are looking at, as of today, it appears that there will be a inventory gains and there is a rising crude market. And so I expect that the Indian refineries margin should be better than the Singapore margin. As far as we are concerned, depending on our physical performance of the quarter so far, I expect it to be better than Q3. Even otherwise, if you see the Singapore spot margin today, refinery margin is around $2.89 or so, compared to February so far at 2.52, and the average of the year are 4.52. So I would expect that the Q4 margin for us should be, at least the core margin, should be slightly better than the Q3 margin. But of course, that core margin is not by calculating, just adding or subtracting the inventory gains. But I think physical performance-wise, we should do better than Q3.
A word on oil product demand as well, Mr. Surana, because those numbers have been, very sort of flip-floppish, if I could say that. Though January number is 6.4% growth, which is better than December, better than actually October, November as well. What do you see in terms of demand, and for your own self, I mean, what sort of throughput levels have you been operating at in Q4? You're also undertaking expansion in both in Mumbai and in Vizag. So just a word on the demand supply.
So if you see, the November growth was sluggish, but the reason was there is a seasonal demand effect, and this time the Diwali was in a different month compared to the last year. And normally, immediately during the Diwali days, we see a slowdown as far as truckers are concerned. But if you see December and January or February so far, it has been good. We expect that the overall demand of the product should be in the range of 4.4 to 4.5%. MS should be in 8% or so. Diesel should be around 3.5%. LPG may be around 8 to even double digit possible. ATF will definitely be double digit growth.
Okay. Well, Mr. Surana, finally...
As far as throughputs are concerned...
yes, sir, go ahead. Sorry.
Yeah, as far as the refinery throughputs are concerned, the Q4 throughput should be better than Q3 throughputs. And as you know, in case of HPCL, well, marketing volumes are much higher than what the refinery volumes are there. And we should surplus the previous marketing volumes of the last year.
Okay. So I just wanted to ask you one more thing, which is a bit tricky, I know. But I'm taking the liberty with you. The government of India apparently directed you to acknowledge ONGC as a promoter in regulatory filings. Can you just tell us whether there is any progress on this issue and whether any synergies have begun between ONGC and your company?
I think I did clarify it earlier that Government of India has said and informed us that Government of India continues to be the promoter of HPCL, and they have advised us to include ONGC also as the second promoter.
Okay.
We had asked certain clarification. We are clarifying on that issue because this transaction is of a different type than the normal transaction you see, considering the history of the company, etc. And so once we get those clarifications, we will do whatever is required. As far as I can assure you that whatever is correct, we will definitely do it.
Okay. All right, Mr. Surana, we'll leave it on that note, sir. Thank you very much for giving us some color on how the quarter is shaping up. Speaking of color, the color is deep red for the market. We are back down a whole 1%, 104 points on the Nifty. I'm just looking at some stocks like ICICI Bank, etc. Some of the biggies, Anuj.
No, I think Bank Nifty is weak, Surabhi. That's something you'll expect on a day like today. And you know, that was the point I was making. Don't just go by the first.
It's a long day. I completely
Don't just go by the first dip because you know you'll buy the first dip on a day like today, especially after a big market rally. But you know you will keep seeing more statements will come. First of all, this 24/7 reporting, I think on war issues should be avoided. But anyway, you know you'll keep getting more incremental information. One thing which is really interesting and perplexing is that the dollar rupee is almost back to the high point of the day. If you see the chart of the dollar rupee, that's behaving itself. At some point, you know, money market does move ahead of the equity market. You know, 19 paise, it's a normal any day affair.
Any day move, you wouldn't say anything has happened on the border.
Dollar rupee also reacts because of crude.
Crude, yes.
So, you know, for them it was
so there's a counterbalance over there.
And also, I mean, I guess a more mature reaction. It doesn't have to be that retail. It's an institutional market, and therefore, you know, there is less of a herd mentality. Less. It does not exist, but there is less. An important point that we must point out for the Bank Nifty is today the reaction is not only to border news. It is also to the DHFL news. We should not forget that there will be a little bit of a worry in the minds of institutional investors that will mutual fund flows be intact and their rollover of other NBFC paper. Could that get affected? These questions, and also we know a lot of banks, there is a 50% rise, as I have told you, you know, in September, in terms of bank exposure to NBFCs. It now stands at 7% compared to under 6% about, say, about December 2017. So there has been a sharp rise in their exposure as well. And you must expect, you know, the reaction of the financials to be there to this event as well, and not just to the border news. Okay, we have to take a break. On that note, let's get the technical trades yet again from Ashwini Gujral, Mitesh Thakkar and Rajat Bose, and we will be back with more corporates as well.